Accrual accounting is another way, another method to record sales, revenue, and expenses. This method recognizes revenue by using a different approach. Now, the way revenue are recorded for a business relates to the time that services are provided or goods are delivered to a customer, as you can see here. So basically this method is not concerned with the time that payment has been received for those services or goods delivered to a customer. Likewise, when it comes to recognition of expenses, this method recognizes expenses at the time that there is use of an economic resource. Okay, let's say, for example, use of employee services, use of raw materials. So this method, again, when it comes to the recognition of expenses, is not concerned with the time of payment, but with the time that these expenses have been incurred. Okay, so let's see more specifically examples to understand more clearly this method of accounting. Here we have an example of revenue recognition according to the accrual method of accounting. And the scenario here says that we have a business that delivers goods to a customer in January. However, payment for this delivery of good is received in February. Okay, so remember that this method is concerned with the time that services have been provided or goods have been delivered to a customer. So here is what? January, the month of during which goods were delivered to a customer, and here we have when the actual payment was received for this delivery of goods. So according to this method here, we will record sales revenue in January. Why is that? Because this is the time at which goods were delivered to a customer. Here we have another example on how we may recognize revenue according to the accrual method of accounting. Here I have included the title for this transaction, receiving advance payment. So let's say we have a business that receives payment from a customer in January. However, services to the customer will be provided in February. Be careful here, okay, because this diagram shows here that in February the business will provide service to the customer, and in January is when the business receives a payment. So here we have a prepayment of customer. So according to the accrual method of accounting, we will record sales revenue at the time that services were delivered to a customer, which is in February. Okay, even though, as you can see here, payment was received a month before. So instead, what happens during the month of January, when the business receives a prepayment from a customer, this automatically creates a liability for the business. Someone say, what is the liability? The liability is to do what? That the business is obliged to provide services to the customer. So these services will be a liability until there is full delivery of service to the customer. So again, I repeat, at the time of the payment, we cannot record any sales revenue for this transaction, even though payment has been received from the customer. And this creates a liability for the business. The liability is what? In the form of services that need to be provided to the customer. And when here services are delivered to the customer, the business has no further any liability or obligation to the customer, and records the amount that it received in January as sales revenue in the month of February. Now we're going to see how the accrual method of accounting records expenses. Let's see the first example. We have an employee who works for a business in the month of March, and the business pays the employee for these services a month later in April. Okay, so we have use of the employee services in March, and in April we have payment of the employee by the business. Okay, so remember that accrual accounting recognizes expenses at the time services are used, and therefore, in this case, payment is irrelevant to the recording of this expense. In this case, we have a salary expense for the employee. So we have the time that services were received, meaning use of economic resources, use of the employee services, and we record this salary expense in the month of March, even though payment was made to the employee a month later. Let's see another example of expense recognition by the accrual method of accounting. Here we have the case of making an advance payment. Let's see. Let's say you prepay an employee in February $1,000 for the salary in March. In this case, okay, so remember, payment in this case takes place in February. However, services by the employee will be received in March. Okay, so we cannot record any expense, salary expense here, because no use of economic resources have been made yet. The use of the economic resources, in other words, the use of the employee services, will take place in March. Therefore, we will record salary expense in the month of March. So that's how accrual accounting recognizes expenses. Again, we see here the difference. Okay, to conclude that revenue expenses for accrual refers to the time that services are provided or received, while in the cash method of accounting, what matters is when payment is made or received.